I want you to not waste your time and money with the wrong option strategies. I've been trading since 2018, and these are the top 3 strategies you need to use and nothing else. Because back then, we didn't have the luxury of going on YouTube and going on Instagram and learning from a variety of people all their secrets instantly. Today, though, you do. So you have no excuse to not succeed with this year in front of you with option trading. So these 3 strategies should change your life if you implement them domino by domino, which means this first one you cannot forget about and you cannot skip over, because if you implement this strategy perfectly, you should have a green streak that looks similar to mine, where there's been no losing trades over the past 4 months. Just simple, pure profit. Selling puts, that is. And selling puts is where you are putting your capital on the line. Your cash is on the line, but it's generating money. It's the safest place to be. So if you're new to what this is, quick 30-second pitch to get you to up to speed on what you need to do to sell puts. Basically, Tesla, the most popular stock on the internet, is a lot of premium, and it's also a lot of collateral. So you need $30,000 to sell one CSP, cash secured put. If you sold this October, November, or December, that's $3,000. How would you like to make $3,000 over the next 3 months in your sleep, closing your eyes? The idea is you tie up this cash, you always get the credit. When you sell the put, you always get paid. That's the beauty of this. What we can't control is the stock price. So that's the other thing you can go over, research on your own. But the idea is I want you to win. I want you to figure out how to win first, and you have to do that selling puts. If you jump to the next strategy, literally doesn't make sense, because if you can't figure this one out, there's something wrong with you. I'm going to be honest. I haven't had a losing trade with the students in 4 months. So if you can't hit at least 4 winning trades in a row, this is a big problem, because the next strategy is going to be harder. The next strategy is going to be harder. So please focus on having success here and having it quick. It should be within a week, within a month. If you can't have results follow selling puts that quickly, you got to figure out what's going on. And hopefully inside this strategy I'm going to teach you, I might showcase some of the systems we use so that you can be on the right track to win like we are. Because students that are using this are also getting paid quickly, and sometimes it's exciting money. One student had Lemonade, LMND, $400 in with CSPs in like a couple weeks. One student closed and opened a trade same day for $200. So there's a parity here where a CSP can pay you in a day, in an hour, or in a week. And it's a beauty of a CSP. You just never know when the paycheck's going to come, but you know it's going to come, which is the beauty of this system and why you should be a winner quick. And again, if you can't win with this system, you got to figure out why and figure out what's happening, because I don't want you to jump to the next one and lose all your money. This is what I do. This is literally the secrets I teach my students. So make sure you write this down. This is the framework that not only leads us to make profitable trades every week, but hit 5 to 10% per month. That type of return is like a double in your account every year. Sometimes 200%, sometimes 3, depending on the market conditions. So this is the framework to hit high returns consistently, passively. This is high IV option selling. And it's walking a narrow line where you're taking on risk, but you're doing it in a gentle way. What we're looking for is stocks that have high IV. I use bar chart option scanner. I look on the weekly. I look to see what's paying me the most returns by next week. What we do is once we find those stocks, once we choose our favorites, we're going to sell 30-day out options. I give my students a framework of 5% in 30 days. Put on that CSP. If you don't know what that looks like, if you can't calculate 5%, it's pretty simple. The collateral number of the put will change based off the strike price. So this collateral is 32K. 5% of 32K, you have to multiply that number out. That's what you want to receive as the credit. So the credit should line up to 5%. If you're shooting for more, you're taking on too much risk. If you're going too small, taking on too little risk. So 5% of 32K is $1,600. So you should be able to see that number as credit. So that's not 5%. This is also not 30 days out. Let's fix that. So here's 30 days out right there. And you can see 5% is actually at the money. It's the exact strike at the money. So you're going to be selling at the money for this. But we sell options with higher IV than Tesla. Tesla's actually got some pretty low IV right now. And this is from a bar chart option scanner. And you can see these are returning not 5% in a month, but 2 to 3 or 5% in a week. So CoreWeave, really popular stock. Let me show you a secret on CoreWeave right now. 30 days out, if you sell an option, you could sell this thing pretty far out of the money. You could sell this down to 90, and that's right around 5% return. This gives you an 85% chance of getting that money and not getting a sign, which is a really fun way to play this system. Basically, when you sell a put, if it drops too much, you just own the stock, which is the most low-risk strategy out there. I call it a no-lose scenario. It's the only trading strategy out there where you have a no loss at the end of the day. You're either going to make this premium and pick up the stock, or you're going to make this premium and not pick up the stock. Either way, you're making money. No losses. And you just pick up the stock in the worst case scenario, and you have to manage it if it's going against you, which is not that hard if you follow what I'm telling you. All we're trying to do is do this 3 times a month. Hey, Matt, if I sell a 30-day output, I have to hold it for 30 days. That's not true. You're going to get paid if you do the system correctly in 5 days or 7 days. So you could do this trade 3 times, which means you could be making 10% in a month, maybe 20, depending on which stocks you're using. So if a 10K account, we're looking at $2,000. That's not bad. And it might not sound sexy, but again, if you can't hit a layup, what are you doing jumping to the 3-point line? A lot of people can't figure out how to hit a short shot in the market or bunt the baseball, but they're going straight for home runs on their first swing. That's a great way to take the long, slow, painful approach in the markets to making money and trying to quit your job. If you want to actually replace your income, you got to start doing this strategy and hitting those base hits. So my selling entry system is, if the IV is high enough, I sell. 50% is the minimum. Tesla honestly is too low to sell CSPs. I have some hacks I do for that, which is using leveraged ETFs. So TSLL would be the other way to go. This doubles your IV, doubles your premium. Same stock, more premium, right? It's a fun way to do it. I look at RSI to gauge how aggressive I want to be. So if the RSI is low, I go and hit my 5% month. If the RSI is even lower than, let's say, 50, I would go for a 10% month. If the RSI is 30, that's when I would go for a 20% month. And basically what that looks like is, if the RSI for Tesla was that low, I would be selling at the money, which is 10%, or in some cases in the money, which the $14, let's say the $14 strike here is like a 25% return. Pro hack right there. You can write that down. And then again, here's the scanner, here's the stocks. It's good just to scan and see what companies are paying the most premium. What you want to do when you get this scanner is start off by asking yourself these 3 questions. What do I like? What has momentum? I.e. a good trend. You want to be selling puts on things going up. If they've been dropping for a week or a month, that's a bad sign. You're going to be getting assigned. You're going to be getting in bad names, especially if you're following higher IV plays for the first time in your career. And also, what's a strong stock? The strongest stocks are the ones you aren't worried about ever, because when you get assigned, you know they're going to make all-time highs. SoundHound, that's garbage. You got to be really careful choosing on this list. That's where you get burned, or that's where you make your best decisions. So that's strategy numero uno. Now, you make 5% in a month. Let's turn that up a notch. Let's make 5% in a day. That's exactly what we do with our students. We teach them level 1, then we move them to level 2. That's what happened with Nate. Nate was good month, bad month option selling. He was getting in the flow of things, But we moved him to this system that I'm going to show you with this strategy, and he started hitting $1,500 weeks, $200 in a day with spreads. And 5 to 10% is very achievable in a day. There's more risk, but it is very achievable because the beauty of option selling is the win rate. You can see here 80% chance of profit. You can sell a put option 30 days out and have a 70 to 80% chance of profit. It'll pay you 5% return. You can sell an option 1 day out with an 80% chance of profit. It'll have a 5% return. Most people think, well, if the return's that high, Matt, it's probably got more risk. Think about it, 80% chance of profit. If I just said that word, why would it matter if it was a 30-day option or a 1? And why would it matter if you got paid in 30 days or 1 day? The risk is in the chance of profit. And the risk is really in your execution, your understanding of the system and the strategy. So if you really understand how to maximize this system I'm going to show you, it's the same risk. So this is huge because you can create that same paycheck per day. But don't jump here unless you can create that paycheck in a month, at least for 3 months. But this is wild because I just put this system together, finalized the last touches, and this is the framework of it that I want to show you. This is called 1 DTE credit spreads, and we just hit a 5% return trade with our boost traders today, and we did it 2 days ago. So we've done it 2 out of 5 days this week. Yesterday was a break even. So it's very repeatable. It's very high to have this success too. What we're doing is we're choosing a 1 day expiration and we're doing a 2 option trade. I'm going to show you all the details on option strat, but it's a risk to reward of 1 to 3. It's beautiful, which means when you lose a trade, you only give up 3 winners, sometimes 5, depending on where you get out for the profitable trades. So it doesn't blow your account up, which is awesome. The ROI per day is 5 to 10%. It's ideal for creating daily income, but also being in cash. Let's say you had a $100,000 account and you love selling options. You love doing things with half your money, but you got 50K just chilling there. You're like, I'm not meeting my returns. I'm not where I want to be. This is a great way to be in cash, but generate returns and get back to cash at the end of the day. What we're trying to do is when we put on this trade, we're trying to close it out when it hits 50% profit, maybe even 30. You're just trying to trade the markets or let time decay pay you. That means a 10K account could make 10K in a month. I know I might speak Chinese here with the stuff I'm saying, but I have the proof and I'll show you. Credit spreads, again, they're same expiration. You sell an option and then you buy an option with a lower price. The difference of the selling and buying prices is called the credit because one's lower than the other. That credit as an option seller is what you want to collect. And you only collect that if the options decay or if the price moves in your favor. The reason why this strategy is so powerful is because it's the anti-trader status. This is where most people are gambling, most people are guessing, and you're being on the other side of them. So you don't have to sweat. You don't have to be perfect. You don't have to know technical analysis, mumbo jumbo schmumbo. All we need to do is follow this small framework and just do it correctly and get better at it. So the system is beautiful because you're the anti-trader. You don't have to guess. You don't have to gamble. You just put on your trades with what I'm going to tell you and you just wait. We got paid today in 30 minutes on a trade. And there's some instances where it takes 2 hours, but we're not sweating. We're not staring at the screens. We're not nervous. We're going to blow up our accounts. It's really comfortable. And you can be wrong and make money. That is the difference between the anti-trader and the gambler. Basically, option sellers can be wrong and make money. And that's why we want you to jump towards those strategies first in your career. You can be imperfect and be perfect. The imperfect setup, the imperfect trade can still work out, which can make you a perfect trader without having to know the top 10 like setups, without having to know technical analysis like the 10th degree of knowledge. So this helped Daniel, one of our teachers in our higher level of trading in the boot camp for the highest level of this stuff I'm teaching you. It helped him double his account over 21 trades, doubling his account. And he said this before, if I'm trading futures, I get stopped out and it still would have worked out. If I'm doing this system, Matt, I can take a trade that's not perfect and still hit my daily goal. So there's a little wiggle room here that makes it possible to have a huge win streak, to crush the markets. So I love this system for the next step for beginners if they want to grow their accounts faster. This is all you need to do. It's pretty simple. It's what we did today. You can rinse and repeat this all the time. You're just lining up a spread to a key level, and inside the spread there's something called a break even. You want that number above the level. Pretty simple. So if we're doing a call spread, we want to be above resistance, and a put spread, we want to be below support. So let me show you exactly the trade we put on, exactly what it looked like. So here is the market. Here's a key level. There's a high right there. Pretty simple. Like anybody can draw key levels. Even indicators can draw that. I saw the market's kind of falling from a key level. So I said, okay, let's just sell a put credit spread. And this green area is the break even line. And anything under it is a profit for a day, if we held it for a day. Everything over it is a loss. That's where you lose out on 5 of your trades that were winners. And that's where the strategy would break down and you have to manage a loss. There's ways to do that with your higher level though. What happened was, again, the trade was put on this first pink candle here. It took about 30 minutes and then 5% return and out. So what we did is, I'll show you. I went to the QQQ and I go here to bear call spread and I go 1 day out because I just want, boom, instant decay. I want that option decaying even by the hour. And that's the beauty of these shorter term spreads. I typically just try to find a 20% return. So let's say it's $3 wide. I go $3 wide, 20% return would be like a $60 credit. So we're looking for $300 of margin. That's the difference between the strike prices. The first option you're selling because it has a higher price. The next option you're buying, which has a lower price. That makes up the credit you're going to possibly receive. From there, you're trying to collect a portion of that credit. So think about it. If you're putting up $300 of margin, if you make $10 on this or $15, that's a 5% return. So even though we're trying to collect $60, all we need to do is collect 10, 20, or 30 of that, and we can get some really serious returns per day. This trade currently is just cranking still. You can see it's up $20 of 300. So that's almost a 10% return at this point, and it's still going. It's still cranking as I'm teaching this. All I did is really simple, lined up the spread to the key level. So this is the most important part, the most important part. See this number here? This is the break even. When you line up this spread and you get that 20% possible return, you just want to double check, make sure this break even is over that key level or under if you're doing a put credit spread. 574.61 is going to be right here. And then the key level is right here. So we're obviously higher. We're obviously over. So I would take that trade every day of the week. That's why I took it. That's why I gave it to some of the students. And that's why you can see it's almost at a 10% return. Just absolutely soaring. So the last system is the 50 to 100% return in a month without lifting a finger system. This is going to be higher risk, but bigger returns, right? So credit spreads, you're trading them, you're planning them, you're managing them. It's like kind of a full-time job, kind of a part-time job. That's kind of how it works when you want to make income daily, obviously. But if you could make that same return of a credit spread system, let's say that daily income, if you could make that daily income without touching a button, it would be this system I'm going to teach you next. So this is a trade we put on ETHU. It went up 400%. So if you put in, let's say 10 grand, it's making you $30,000 right there, $40,000, which 400%, even if you took it on a small portion of your account, would have doubled your account possibly. So just a small amount of capital goes a long way with what I'm going to teach you next here. And this is the poor man's covered call. This is a two-step trading system. It's a little bit complex to understand both steps, but the most important step is this one, buying a leap option. So I love this because it gives you, for the first time ever, a chance to have unlimited upside. Unlimited upside is the only thing lacking from option selling. The only downside when we sell an option, boom, we only get 5%. We only get 10. But if the market goes buck wild, you could have made 500, 1,000%, especially with the right plays. So having this inside your tool bag is essential for success. So 300 days out would be shown here on option strat as like 1 year till expiration, or I'd say 300, obviously. That's what we call a leap. The reason why we like leaps is because they don't really lose value. If we look at this option, we could hold it from August till October and lose 10%. 10% is nothing when the markets could run and make you 100%. So for this to make you 100%, the markets would have to pop just 10%, which is an average return for the markets in a year. So the leap option, especially if we start finding the right stocks at the right time, is so powerful because you're getting this leverage for a fraction of the cost. To hold this option that could go that wild, you're not paying that much per day for it. And I'm going to show you how to finance those losses per day from decay so that you don't have to pay for them. Basically, what we want to do is integrate the poor man's aspect of it. So selling puts get assigned, you own stock, then you do covered calls, right? You can do covered calls on leaps the same way you do the stock. So if you own one leap option, you could do one covered call. So that, let's say this long-term option costs $5,000 for the triple Qs. What we're most worried about is like the market doesn't go and in 30 days we're losing $300. The best thing to do in that scenario is sell an option 30 days out with a very low delta. So I'm going to go ahead here and show you delta. We could sell it at like 20 delta. And what that does is it helps us bring in $300. So you're financing the time decay, and that means the leverage you're holding is free. Isn't that wild? You're getting this leverage bet that has unlimited upside, and you're getting it for free. The only downside is, you just can't make money past 590 in 30 days. But there's ways to roll it up. There's ways to manage a bad covered call. But even in the downside of us hitting 590, which seems like it's going to be the end of the world if we limited our upside and we went past it, we would still make a really good portion of money. So if we were to hit 590, I'll show you what's going to happen. In 30 days, 590 would make us 20 to 30% return. So that's incredible. And that's really just based off the index funds. I've seen leap options that do much more. You have to look elsewhere. So there's sexier stocks out there that could go 100%, 200% with leaps, but you have to be really strategic finding them. So if we want to finance the decay of the option, we sell monthly calls, 20 delta. The best thing to do is, let's say you have two options, you only cover half. That way you're still financing most of the decay, but one option can go buck wild and one option fully covered. That's what the one you're selling against. So that's the best of both worlds if you can do the leaps that way. And if you can do this correctly, this is where I would expect a 10K account. This is wrong, but to make 50%, 100% in the right market. Because if you just find the right setup and it actually goes for you, 500% is not crazy. That's where I look for the names that could be very powerful. So Ethereum looked really, really, really good over the last 40 days because of the momentum. We had a lot of momentum. Crypto was looking good. There was this moment here we were basing and we entered right here, and that's when it went 400%. And a lot of stocks, let's say OKLO, this is like energy, one of those energy names for AI. This stock has been just trending up for months. And if you just bought at any point during this trend, you would have easily made 200%. So in the right markets at the right time with the right stocks, the leaps are a game changer. So those are the 3 systems I teach. If you're interested in just learning one of those systems with coaching, click the link below, fill out an application. If you're serious about going to the next level, we've figured out what that looks like, and you're welcome to learn it with us. I'll link a video to the right of me on the AI prompts you can use to speed up your option selling and start crushing the analysis better. Peace, everybody.